Everyone, I'm going to go ahead and do the practice final here. I'm going to post what the final is all about on the text beside this. So there's going to be 7 questions, 70 marks total, and I'll go through what all 7 of them will look like here, but you'll see them in this practice. This is also available for you now, so if you'd like to go ahead and continue on, you are more than welcome to do so. So I've just jumped ahead a tiny bit here. Oh, put that to YouTube, but all right. So the first question, we're going to have a inventory costing. You're going to have similar FIFO, moving weighted, specific identification. You might have seen this one on your assignment or in your practice. It is going to be very similar to this. So what I've done is, and I'll show you, is just the difference here between FIFO and moving weighted average. So we're going to start. Hide this. I'm just going to highlight as I go here. Start with our beginning. As we add February 10th, in FIFO, we keep them separated. So here you can see we've added 350. We bring our initial 640 down. We add our 350 here. So we keep these separated because as we sell them, we need to make sure that we sell the older ones first. So now we're at here where our balances are these two. But when we sell 430, we're only going to sell from our older stock first, this 640. So 640, we sell 430, that leaves us with 210, and we haven't touched our secondary stock, this 350. So we sell them at the same cost that we've got the 740 at. As we add more, we continue to keep them separated. And when we make our final sale here of 335, we will get, we'll use our final of the 210. And then once that's done, we just move our way down. So 125 is remaining of 335, and that is the amount. The FIFO is just keeping them organized. It's not so much about doing any math. We can enter in our ending inventory here of 35,750. And our cost of goods sold at 57,000. For moving weighted average, we're going to do the opposite of what we did here, where we individually got them separated. So we start the same, but as we add new ones, we will actually merge them together. So 640 and 350 becomes 990. 48,000 and 25,000 becomes 73,000. We take the average cost here, and that brings us, so when we sell it, we're not pulling from the 640, we're pulling from the total 990. So 990 less 430, we get 560. Then when we add 230 more, well, we just add it to the same pile. So we had 560, now we add it, brings our average. That's why we call it moving weighted average. This should be MWA. Now, by the end of it, you might get some points wrong. So what I'm going to do for you is at the end of every person's exam, I'll go through and I'll just make sure that if you're off by $1 or $2 or $3 or $4, depending on the amount, that it's not a big, I'll just change it to make sure you've got the correct answer. Because, yeah, I'm not going to punish you for having the decimals just off a little bit. Okay, we check our work. You won't be able to check your work on the final. Here we go. So again, let's say this was 57,639. I will just give you marks for that. If it's like 55,000, then I won't. But if it's off by a little bit, I'm not worried about your rounding. Okay, the only one I didn't prep, because I wanted just to make sure I showed you, was our specific identification. So I'm just going to copy our FIFO here. And I'm just going to move this to be a half screen. This is specific identification. Specific identification follows the same format here at the beginning, and it follows the same format of just keeping them separate. The only difference is that when you make a sale, when you make a sale, it just tells you exactly which items are sold. So this will remain the same when we purchase. When we add, our beginning inventory and our purchases will remain the same because we've got to keep them separately. Now, the big difference being is that they just tell you 230 from the beginning and 200 from the February 10th. So 230, 200, and 200, and that's at 72. What we can do is take this 640 and we can less the 230 that we sold. We can take this 350 and we can less the 200 that we sold. Now our balance is up to date. So this balance has reductions of both of the inventories before that. When we add 230, again, same thing happens. And I just got to update these balances because I copied them over, so that is correct. And now when we sell again, it tells us exactly where we sold from each one. So 40, 70. So we've got 5 because that's the opening balance of 75. Then we had 72. And then we had 85. What that then allows us to do is $410 here and less our 225. We can also take our 150 and less our 40. And we can take our 230 and less our 70. And what we end up with is 3 items in our inventory and then these sales. So one thing you can do to check your work, now you have to do it with the calculator. You won't get a chance to do it with your Excel because you're not allowed to use Excel in the exam, but you'll just have to do it by pen and paper. Is add these up. You'll see it's 9270. You can actually check your work here, 92750 and 92750. So you can check, and if these all equal the same, you know that you haven't made any mistakes. So I mean, I just did this one live. Let's have a look. We've got ending inventory of 35,395 and cost of goods sold of 57,355. Our work. Got the right answer. Okay, now we'll go ahead and do our journal entries. We are going to do a one for each, three entries for each type. So we have FIFO here. So I'm going to need my spreadsheet. So you'll actually have to do this by paper. So we'll go back to our FIFO here. And when we purchase inventory on credit, we always have accounts payable as our credit. And this was for February 10th sale. So February 10th, we purchased merchandise inventory. So our balance of merchandise inventory goes up. 25,200. Oops. Recorder entry. Now, this is the September 10th sale. So here's what we sold on September 10th. We had a cost of goods sold, so $24.70. The first thing that we did, first thing that we do is we have an accounts receivable. Because this is the credit sale, we have to scroll up and see what these all were selling for. We had $135 each. Well, we sold $335. 335 times 135, 45,225. We can make our sales. And we can show the sale of merchandise. Our merchandise was 24,750, right? Because we are going to add these two numbers up. It's only the September 10th, so 24,750. And if you're wondering where I'm looking, I'm just looking at the sum down here in the bottom right corner. And we've got our inventory. So for all three of these, it should be the exact same for the purchases. So merchandise and accounts payable, 25. Dice, 520. Accounts payable, 2520. Let's check our work. We can. So they're going to be the exact same. Exactly. So the first two, because this doesn't change our costing, right? This doesn't change like our sales costing. Only thing that's going to change is the third one. Got two. So this will be the exact same. In sales. Because the 135 won't change, right? 5225. Only thing that will change, and not the accounts, just the only item, will be our cost of goods sold. And that amount we can find 31 September 10th, so that's where we can find this amount here. Cost of goods sold for 25,848.36. And we've got our merchandise inventory. Again, this won't change, 25,200. This won't change. For 45,225. And got, again, this part won't change, just the amount. So cost of goods sold and our merchandise inventory. Again, I can go through and I can just add these up, 25,705, and we're just looking for that last transaction. Let's check our work. And the only reason why this one is, it's just a rounding error. So again, I'll go in and I'll clean that up and I'll make sure that you get the right marks for that. As long as you're within a few bucks, it's all good, 1% or so. Then you'll get the right marks here. Everything else is correct. So this one will take you a bit of time, but if you can keep the your FIFO and moving weighted average, and you're up to speed on that, then you should be good for the final. I've included specific identification, but I probably won't include it in final. So just as a heads up. But if you can do it, like if you know how to do it, it shouldn't be much harder, right? It's very similar to FIFO. So let's go to the next one. Yeah, we can score it, sure. Right, we knew we made a mistake just in the rounding, but I'm going to override that. I'm going to give you 100%. Okay, so we have We have here bank reconciliation. This is where I'd probably love to use some pen and paper to get it right, but that's all good. Bank statement balance. Well, we'll go to our bank statement. Let's add, we're looking for deposits. So again, everything on the left side here, items that are in your bank statement, pardon me, they're in your ledger, your general ledger, which are your checks written and your deposits made, but they haven't yet hit your bank statement. So that's what we're looking for. So here I'm looking for, first off, the deposit from the last one, 10,000. Did it hit the bank statement? 10,000 did. So now I'm looking at these deposits, 690, good. 4,600, good. 5,900, good. 13,900, good. 1,750, good. And 20 is not here, but we're not worried about the 120 not here. We're worried about the 40,600 that's not here. So we need to have this April 30th deposit, 44,600. So now we have all of the amounts here. Now I'm going to actually just take a second and quickly read these notes. In reviewing checks returned by the bank, the bookkeeper discovered that check 28 for delivery expense was recorded in the cash disbursements journal correctly as 4,900. Okay. NSF check of 14,200 was that of Oprah Winnie. Deposited 1,900 is regarding a note payable. There's also a deposit of 120,000 dated on April 30th. It is an investment made by the owner into the business. The bank transferred the funds electronically from the owner's personal account to his business account, which is why it was not recorded in the receipts journal. Okay. So one of the things that we'll have to have a look. One of the things that you may get wrong on this, but I'll override, is if there's a scenario like this 4,900 one is here, is the error might, let's see if they've added the error check 28. Okay, so I would add that to this side of it. McGraw Connect might want you to add it to this side since it's a bank error. I'm going to add it to this side. If it's wrong, that's all good. What will happen is I will just override it as well because you get the right answer regardless. So, actually, yeah. Add that here for now. Okay, so now we're looking for outstanding checks, starting with 14 and 22. I'm looking on the bank here for a 14 and a 22, and neither of them are here. Okay, so for outstanding check 14, check 2, and then I'm looking for 23 through 32. So 23, good. 24, good. There's no 25, so we can add that in. And it makes it really easy for you because 26, 27 is telling us which ones we're missing. So I didn't actually realize that McGraw Connect made it this easy. That's all good. And 840 and 315. 25 and 27. So 25 is for 940 and 4230. 940. We'll go. Let's go one at a time. 4230. 41,000. 7,400. And we automatically get this just a bank balance. So I'm really wondering if they want us to put this. I'm just going to put this error check here just right now, just to check my work. We'll just check to see if we missed anything. Yeah, okay, so they do want it in the bank side, just because it's a bank error. I'll make sure you get the marks regardless of whichever way it goes. And $1,028. Okay, so it was 4,900, or the bank was wrong at 9,400. Should have been 49. So that is a $4,500 difference. And that should be everything on that's all correct. Now we're looking for the other direction. Now we're looking for items that are on our bank statement that are not on our ledger. So starting with this 120,000, we're going to add owner investment of 120,000. I guess we're also going to include our book balance, which we can find here. Our book balance 11,213. And so now we've included all of those, the deposits and credits. Now we're working our way through here looking for these. So we have NSF check for 14,200. Next one here is a payment, a bank loan. Note for 15,900. Got an interest charge of 450. And we've got service charge of 175. All there. 159. So I guess it wants us to do this math ourselves. Oops. I don't want to do this at all. All right, here we go. There it is, because I don't want that to continue to pop up on me. Here we go. Okay. 159,213 minus 58,108. 131,213 minus 30,725, 148. So that's how we know we've done it correctly. Now we're just going to go through, and anything on this side we need to do journal entry for. So reinstate the customer account. Well, Oprah Winnie. Better Bank. 14,200. Let's record the bank service charge. Okay, bank service charge. Cash 420, I believe it is. 450. 175, sorry. That's the interest. Interest expense. Okay. That one's 450. Note payable, so we've got payable for 14,200. And we've had the investment by owner. So we've got an increase in cash, 20,000, and our owners, not sure what they're calling it here. Let's see, capital. Okay, we can check our work. We should be 1,200. The note payable is 15,900, right? That's all. Just entered the wrong one in, and I actually didn't hit enter there. So just make sure you double check your work. I'm just kind of cruising along. Okay, what I'm going to do is I'm just going to press pause here. I'm going to continue on, but I'm just going to break this video up. So if an error happens, it's not a big deal. Okay, I will be back with video 2 soon.